This is your daily TA wrap. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Glad you could join me. We have a full show tonight, and we have a market that's a little bit in turmoil, so to speak. Let's look at the end of numbers right quick. So, as we got underway today, it was a lot of pressure. We had downside pressure right off the bat, and it just continued. S&Ps at one point, they were down more than 1%. I don't think I've seen that for a while, maybe a couple months. They end up down 0.68, but you can see the leaders on the way down again: Russell, NDX, NASDAQ. And that's typically not what you want to see leading on the way down. So pressure, yes. Is it about time? Yeah. I mean, we've been straight up for, what, 8-9 weeks? So, you know, to get back some is what you got to do and what you got to expect. Gold tried to push lower, ends up slightly higher on the end of the day. Copper, same thing. Silver's just strong as can be still. All these metals still hanging at the highs. Bonds, nice big move again today, up 1.13%. Big move there. Nat gas down again. That may be putting in a bottom pretty sure on the pretty soon on the weekly. One of the members was asking about it today. Oil, a little bitty bounce here, not much, just a slight one, almost sideways. And despite trying to pull back, the dollar still holds pretty firm. Dollar looks like it wants to go higher. So that's kind of the ending numbers. Down 100 on the Dow, down 13.5 on the S&Ps. If we pop over to take a look at the charts, what we're going to find out there is that we actually had some pressure starting to build up. So if we look at the daily here on the S&Ps, volume starts to expand. As that volume expands, it comes back into those two big bars we were looking at last night. First one's 1961.47. We got down to 1959, so you can see expanding volume, but you came into a huge volume bar. The other volume bar, 1963. So as you come into those bars, right, that holds it and does what? Flips it back around, or at least flips it back up. It closes slightly over that area. So S&Ps look to me, 1963, 71, look to me like they're going to try to get a bounce going tomorrow. That's the S&Ps. Now the Dow, on the other hand, this guy came back doing a full retest regen off this prior high. The low there is 16,920, 16,912. You close at 16,906. That's an immediate retest, regenerate. That does what? Fails. It fails to regenerate. So you go up, you go over, you're back under it, underneath those lows. That's a failure to regenerate higher. If that doesn't immediately spike back around, that's a big warning sign. The only caveat, if there is one, is that it's the Dow and it's the Dow 30. So I guess if I had to have a caveat, it would be that. NASDAQ composite coming back in. On the weekly, the NASDAQ composite is actually coming back into a weekly swing point high. 43.71, it's at 43.91, got as low as 72 today. So you're almost back into a retest regen there. That would also be an immediate one, which could trade you down to the bottom of it. 42.39. So that's another, you know, 160 points if it wants to go that far. And folks, if you look at these support zones, and I've pointed this out before, you know, a normal, average, necessary, if you will, retrace to anchored support on a weekly is way back at 4,200, right? Even as low as, you know, 41 and change. That would, you know, if it traded back to here, there still wouldn't be anything wrong with it. So, you know, you have to realize this market can fall a good piece and still be fine. that wouldn't be abnormal whatsoever. That's what these charts are telling you here. Look at it on the daily. That support zone on the daily is also way back here at 41 or 4,200. So we could get a big drop and still be a normal type correction, right? Still a bullish market. It wouldn't change. I mean, you would certainly not be bullish on this time frame, but on the weekly, you'd still be bullish. It wouldn't even change, right? So do realize that there is a lot of room to move down. I don't know that it's going to happen tomorrow. As a matter of fact, I think there's a decent chance you might try to bounce tomorrow, but you know, the setup in terms of a reward to risk, and I've talked about this for a couple days now, there is a lot more risk than there is reward at these levels. And if you care to look at it, you know, there was a piece that I did on the front page here today. If you want to check it out, market timing gets a bad rap. Basically talking about where we are and the kind of setback we still could get. It's not the time to be buying recklessly at these levels, in my opinion. NDX, same sort of thing. 36.14 just to get back to support. If you look at where we're at, swing point highs there. You close a gap today. If we look on the weekly, let me actually get to the weekly here. Bear with me a second. Here we go. Swing point highs way back, so this could come back a long way just to get back into a retest regen. And so much of that is the big three: Apple, Google, Microsoft, and the stocks. Really, it's like 60% of the index. Russell has been our lead dog. This guy's been telling us most of the time what's going to happen. Russell comes down hard, tests into a swing point low, bounces back over it, closes over it, volume on the way back, 330 into 310, so it's coming back with some decent volume. It's also coming back into that support zone. We said it might be able to get back into that, and in fact that's what it's doing. So the two volume bars, the lows, 1175, and of course this one was way up there, 1182. We close in at 1172, so we're under the big volume bars. The only goodness on the trade today is that it closed over this low, but it hit with volume. That kind of suggests it's going to do a little bit more on the testing come tomorrow. And so I wouldn't be surprised to see a little bit more pressure probably first thing in the morning. So that's the indexes. You know, nothing particularly bad, but there's really not much to, you know, hang your hat on. The worst things, or the worst thing, is that Dow coming back as quickly as it did and failing to do a retest and try to regenerate higher. So I think, you know, these markets continue to give us signals, and we had those signals based on last Thursday's close that it looked as if we were going to come back in. There, it was the finishing up of many of the projections. Now, it's actual breakdowns of various things. In the case of the Dow, an inability to retest and to regenerate higher. That's what should happen. It didn't happen. If it doesn't happen, that tells you it's not as strong as it looks. If we look over at the sectors, the SOX, I'm going to point out the ones that are interesting. SOX comes back in, does a test. That one generates back the other way. This one's probably going to spike back up a little bit. That's going to help the NDX tomorrow. But I don't know that it's going to go that far because these volume bars, the big volume bars, were down bars. June 23rd, June 24th. Those were volume bars to the downside. So yeah, you get the first bounce off of them, but if you get up underneath them, then look out, because then they become some serious resistance on the way back. The other ones that looked interesting, XLE. XLE is on the verge of trying to break. And that's going to be an ABCD structure to the downside. It's also going to be a trend change. So far, the only trend change we have is what you see in the XLI, and that one is already sideways trend. Now it's gone, yeah, here's the other low. So the other low is 53.76, and it's in danger of breaking it. So, and it looks like it's going to. It looks like an ABCD structure of a downside coming. So XLI getting ready to go bearish. It's going to be the first one. XLE getting ready to go sideways. That would be 2 transitioning to the downside, or transitioning to a lower trend, a different trend, not bullish. Once you get 2, especially if you get 3, then you start to see the rest of them start to follow. So these are, again, warning signs of downside pressure still to come. XLK comes off, does a retest regen, actually hits that bar with volume, but if you look at the bar on the breakout, you got 7.4, you're coming back with 6.9. That suggests this thing's going to bounce. That's also what the SOX is suggesting. So I think you're going to see the NDX try to lift come tomorrow. XLP, XLU, those are just range trades. XLV also looks like it's going to try to bounce tomorrow. And the other one that's starting to get a little worrisome potentially might be the XLY. Now that was the weakest one back before, but it held on and actually went higher. Now it too, I probably shouldn't classify this one like the other ones, because you know, when it got the breakout over multiple swing points here, it did get the 2 to 3 bars, right? Got 1 bar, 2 bars, and then it started back in. So this one hasn't done anything wrong, but it's coming back in to do the retest regen again. Let me just get the number on it. The low is 66.85, and we traded into it today. So we trade into it. Oh, so that's why I did it. I was trying to remember why I thought it was getting dangerous. Well, the reason why it's getting dangerous, yes, it got the extension, but as it's retesting into this bar, and it's already into it, it's got more volume on both the breakout bar and the swing point high. That one says it's probably going to try to test it again tomorrow. And so as they come back, there's not a lot of room on this swing point high. 66.85, you got as low as 66.84. So you did a full retest today, and you did it with volume. Going to get another test tomorrow. If it starts to break it down, again, you'd be setting up more pressure, making it a range trade instead of a bullish trade. And as these markets move from bullish to ranges, or worse, transition to lower, that's not a good thing. That tells you something larger is coming. So, you know, all I can do is tell you, you have to take the action. If you're watching my portfolio and a member, you can see what I'm doing. But if you're out there just, of course, viewing what I'm saying, you know, be aware. There's more risk than there is reward at these levels, and you have to act appropriately. Talking about risk, let's go over to the world markets. In particular, let's look at the French CACs. CACs breaks down. Remember last night we said it broke down, got under it, was an ABCD structure to the downside? Well, it does it with some velocity today. Coming down hard, coming down fast. That one prints to about 43.25. I would think in the morning you're going to see it go down there and hit it. So big, fast spike to the low. Doesn't have huge volume as it's coming back compared to this low it's going to test into. So I suspect it is going to hold and get a bounce from there. But that's not the sort of action you want to see, right? This thing has gone from bullish to bearish in a rather quick fashion. And as I've told you many times, it's the weakest of the economies there, and the one I would definitely have stayed away from. FTSE. FTSE's back to the bottom of the range. Remember, this one had an ABCD structure to the downside, couldn't do anything with it. ABCD down, it breaks here, has an ABCD down, doesn't do it, flips back around, goes over a swing point high. Now it was doing a retest, not a retest, but a fade, potentially going to set up some sort of an ABCD structure to the upside. Well, not to be. This thing is a range trade and nothing more at this point. The danger here, of course, is that it starts to expand this range. So we'll have to see if it gets its bounce. Volume wasn't too bad today coming into this low, the high of this low, but it's into it. So it says it could trade lower. So I expect you're going to see some pressure in the morning, both on the CACs, on the FTSE, and then if we move over to the DAX got a swing point low. It's going to try to get into it. This has been showing pressure, got all the way back to the top, now it's back down. Volume not that bad, it's back into the swing point high though. Again, that was a high that reversed, so you can't put quite as much weight on it. This thing looks to test that swing point low in the morning. From 949 on in, it's doing 858. I suspect it tests, it holds, bounces again. The strongest one is the the DAX. The DAX has still got this range that it's dealing with. Inside that range, there's basically two of them. It's at the lower end of it again. So, you know, not the end of the world here, but not the sort of action you'd like to see, especially since the ECB has just told us that they're going to make these markets rise. You know, in so many words, right? Because they're going to weaken the FXE. And if you glance over at the FXE, in fact, it is a little bit weaker, but not tremendously yet. I assume if this thing starts to break down to the bottom end of this range, then we're going to see some pressure on the European equities to go higher, and again, for our equities to probably trade lower. If you look elsewhere, the positives, Asia, you've got Hang Seng still hanging at the high. That 8 shares, they're not doing anything wrong. The HSI is actually over the highs and hanging up there. They look to try to, you know, potentially they'll get that retest now, but they actually look like they want to go higher. The Nikkei did a doji last night, actually could pop back up tonight, and Taiwan's still looking pretty strong, hanging at the highs. So when you look at Asia, it's not a bad deal. The weakness right now is in Europe, and that's because of the economic numbers that are coming out of there and the worries that Draghi just hasn't done enough, right? Because remember, they didn't do QE. They did those targeted LTROs, and now it's called targeted LTROs, the long-term refinancing operations, where they targeted towards special entities, including businesses. And you know, at this point, market's not even, you know, even though it's $1 trillion they're targeting, market's not thinking it's enough, it looks like to me, which is going to force the European Central Bank's hand. If we look at the OX markets, and in there, I'm going to point out a couple things. One is some of the risk is coming off here. For example, if I look at the, which one was I looking at? Yeah, the EM's still at the highs. Frontier market's down a little bit, but oh, it's the junk bonds. The junk bonds is what caught my attention. These gapped down, and it wasn't a dividend. They gapped down, now they're just drifting back in. Junk bonds, you know, that's saying that they're taking some of the risk off the table. And on the flip side of that, you're still seeing, as we talked about at the opening of the show, you're still seeing gold unwilling to come in, silver unwilling to come in, flight to safety in bonds, I don't know, but they certainly are range trading. They didn't sell off. Remember, these had a multiple swing point break and wouldn't sell off. That tells you it's stronger than you think. So this, to me, is definitely a range trade now. And if you want to be long this particular market, this is really a good sign. You got a kind of a range down here, and you got another one up in this area. So you're right up to that middle part. We'll see if it steps over and gets up higher, but it does definitely look like a range trade. And the good thing about it is it's telling you it's stronger than you thought. Oh, that was the other thing. The dollar, there's no sell-off in the dollar. This thing has bounced up here and is holding. Let's see what kind of questions we have. You can text me 303-912-9110. You can also email me, support@tatoday.com. One of the members pointed out a couple stocks, wanted me to take a look at them, so let's look at those first. he was doing some research into some robotics surgery companies, and the two that he came up with that interested him and actually looked pretty interesting to me is TMDV. This is Titan Medical. Titan Medical is a development stage company. So this is kind of a growth curve type company. They're doing design development of robotic surgical systems for minimally invasive surgery. Got a big spike high here. Now the one thing to notice is, you know, the volumes on some days really not that high. So this is not something you want to, like, you know, jump in with both feet, because you don't have all that much of liquidity here. Look at it on a longer term. Let's start with the monthly and work our way backwards. So here's the monthly. So you had a big push way back in October of 2010. That top was 250. So you back up there. You got more volume this time as you're hitting it. 218, 276, 249. So you hit it, you have more volume, you come off, you're back up there, you have less volume. Now this is on a monthly. So that actually is a double top in the old classical world. And in the neoclassical world, it's a test of the highs, and it's actually, at this point, it's a failed test. Because you went over it, you had more volume, you closed under it. Okay, what does that say? I'm going to go try it again. Well, it does. 276, didn't quite get to it yet. 276, you're doing 274. Now you're at 270. Looks like it's going to try to test it again. If it does not break out, then that's going to be a failed test on that high. Looking on the weekly, nice big volume spike on the weekly, 276. That was that monthly fade in. You're at 274, 270 today. I expect it's going to test that top. You're going to have to wait to see if it can get over it. And the way you trade something like this, in my opinion, is you let it get over this, let it trade up, right, and then catch the retrace. I don't think you want to buy the breakout. It's not that extended, you know, in this time frame here, but it's definitely that extended when you go back a couple months. So what is this? 6 months ago, trading at 50. Now you're at 250. That's you know, that's what, 500% or something already. So from that perspective, you just gotta let it trade over and then back under. Ideally, probably what's going to happen is this thing's going to fade back in, and you can pick it up at cheaper prices. Daily, let's look at that one more time. And yeah, it's the same story. So I think you got to wait on it. It's not a bad looking setup, but you got to wait on it. I wouldn't be jumping here. The other one was TRXC. TRXC. Now this one, another what is this? Transinterix, which is another robotic surgical. You see, these guys focus on development commercialization of a robotic assisted surgical system. They also look like they're in the startup stage. And I say that because I don't think they have revenues. Let me check these guys out real quick. So this is TRXC. TRXC. Yeah, they got no revenue, negative revenue, and there's just nothing there yet. So you don't have anything to base it on yet. So going back to the chart, so you had a big gap down. Now you come back about halfway in the gap, you're fading back off of it. Let's go to the weekly. So there's the gap down. Yeah, you can't touch this one yet either. As a matter of fact, the other one probably looks a little bit better. Okay, so there is a good thing here, and that is the monthly chart. Now notice there was no volume back here. It's only recently you're starting to see volume. So just like TMD.V, this is not something you want to jump into with a lot of shares because it's not trading a lot. So you go under, back over, big spike up on volume, and now you're back down. Now this is on the monthly. That's a good sign. Now you want to let it fade back in to this area. You know, let it come back into this area and see what it wants to do. That's the way you have to trade it. So you just simply have to be patient, let it come back in. Now let's go back to the weekly. So that was last month. I want to see where the volume was. Yeah, not bad. I mean, the volumes were mostly on the upside. Pretty good volume on the downside here though. So yeah, I was trying to measure, was that monthly spike up on volume really up volume or down volume, and you can see here a decent amount of it was coming out of it. So I definitely wait on this one too. I think right now at this particular point, TMD.V shows, the Titan Medical shows the most promise, but there you have to wait. Up on the boards here, can you look at Twitter, AWR? You got a bunch of them for me. Let's see if I can rip through these. I got 5 minutes. Twitter and yeah, Twitter. So Twitter, I'm on a weekly. It's coming back into the big bar. It never got tested on the bottom, so that's a negative. Let's see what it looks like here. Okay, so you're probably going to find some support when it comes back into the support zone. You did get a little escalation, 49 million, doing 134 here. Let it test into the 3610 area and see if it can get under it. If it can't and stay under it, right, then all you got to do is risk back to about 34.60 or so, and you're shooting for the tops again. I don't particularly like this company, and I don't particularly like this chart, but that's the setup as it comes back in there if you're trying to trade it to the long side. If you're in it right now, I think you're going to test into these two bars. You're going to test back into this big gap down bar on May 6th, and you're going to test back into the low of the June 12th number. Next one up is ARWR. Let's see what this one is. Arrowhead Research. And this one's kind of all over the place. This is going to test this low. 1108. I would think you get a test of that low, and you get it pretty soon. And you're coming off with volume. You're going to test the 1032 potentially again too. So this support zone, I wouldn't trade this until I see it test this area. That's that bottom of the bar that you want to see it test is here. That's the 414 bar. And you also want to see it test under or into this low, which is the 1108 June 9th bar. If it can hold that 10 to 11 area, you know, 1032 to 11, you know, then it might finally have a bottom, but it's got to hold there. I don't like the volume flows here. They're not particularly enticing to me, but it's a little hard to read, but I think you will at least see that test, and then you can make a decision. Last one is FireEye, F-E-Y-E. This is a securities company. They also had a big, these guys dropped like 80% off the highs. Now they're coming back, you know, they made a nice big spike up to the top side. Now they're coming back in. They closed their gap. Now they're coming back in. They're going to test back into this bar too. 31.25. All your volumes in here. This is where you're going to want to buy it if you buy it. And so you want to see a test into it, and the TA today charts are showing it to you. You're going to test right into this support zone, and that's where you make the decision. If you come in here, the volumes are this low, you hold, that's going to be your buy. And that could come as soon as tomorrow. So, you know, the people got wiped out before. They don't, you know, it hasn't been that long. They got back in it. Now all of a sudden they're having to jump out again, and that can lead to fast moves. 42 to 23 or 42 to 32. You know, that's a $10 drop in 4 days. That would make most people jump out. So that's what's happening here. Let it test in lower and then make your decision. PFE, a retest regen on the 6 bar on the daily chart. It had broken above multiple swing point highs. What do I think? You're coming in with 22 into 26, and you got a spike high out there still. And on a weekly, yeah, it doesn't look too bad. That one might be a decent setup. I'd let it test in there. How did I get that up? Let me get PFE up. What did I do with TLT? I'd let it test in there and you know, give it tomorrow, but that might be a decent buy in here. So yeah, doesn't look bad. I think you'll get a test again in the morning and you might have a buy right there. All right, I'm out of time. Thanks a lot. Appreciate you joining me. Folks, have a great night. I will be here I will be here again tomorrow, of course, and we'll take your questions and look at these markets. I think you're going to see a little pressure in the morning, probably a bounce after that. Have a great night. See you next time. Good night, folks.